Friends, in this video for I Thought Wealth, I'm going to talk to you on the topic, is the Adani IPO an R power moment? I got this question from a friend on WhatsApp and I thought why not I answer this question through a video. Firstly, there is a distinct difference between this Adani IPO and the R power IPO. R power, when they IPO'd, had nothing to show. They only had some land. There was no operating business, and yet the company was valued at 1 lakh crore and they raised 10,000 crores. It did not have the kind of solid, serious institutional backing which the Adani IPO seems to be coming with. Instead, what we saw in the R Power IPO was that the institutional investors who got firm allotment sold in the first hour of listing. In fact, the collapse of the R Power IPO was, to my mind, engineered largely by these institutional investors because they sold from the time that gong or bell was struck at listing hour. The retail investors literally panicked. So, what we saw was euphoria on the one side in an IPO, and we saw the reverse of that, a fear psychosis on listing. How soon can investor emotions change? That was the textbook lesson taught by the R Power IPO. So, in that sense, R Power was very, very different. Also, R Power was a fresh issue and not a follow-on public offer. So, there was no price history or discovery in the case of R Power. Now, let's come to the Adani IPO. There is no denying that the valuation of Adani Enterprises looks rich. It is stretched. Also, this issue is coming at a time when the markets fear that Adani Group in various companies in general and in this company, Adani Enterprises in particular, is leveraged a lot more than it ought to be. So, the idea behind the follow-on public offer itself is to deleverage, that is, pay back some of these loans and make the company less indebted. To reduce the loans is the purpose. Also, the group seems to be coming to this issue with the backing of multiple sovereign wealth firms. So, countries are investing in this FPO. So, you are having Qatar, you have Abu Dhabi, you have multiple entities who are very serious long-term investors who are showing interest to invest in this follow-on public offer. Now, they don't seem to mind that this valuation is rich and this issue is coming at a rather uncertain moment. Also, the issue is timed just before the union budget on February 1. So, 31st evening the issue will close and on the next day the budget will be presented at 10 in the morning. So, in that sense, the timing seems to be very finely done to ensure that the issue succeeds before the budget comes out. So, in that sense, the Adani Group seems to have done its homework. They seem to be very well prepared, and once this issue succeeds, the major criticism about Adani Enterprises being an over-leveraged company will be dealt with to some extent. So, in that sense, the borrowings will come down. So, the markets can't say, oh, there's too much borrowing in this company. Also, the dilution in equity because of this issue is not too high, and the company would be able to show earnings immediately because it anyway has businesses and earnings coming its way. It has regular streams of income. Also, there is a probability that the company may again do one more demerger once this issue is completed because they have businesses within this company which they may demerge, and one of the potential businesses could be the airport business. So, we don't know what will be the follow-on actions after this issue. So, in that sense, somebody may buy this issue but later get a piece of another business pie. So, these are the factors about the Adani issue, which definitely make it different from the R Power IPO. So it is a going concern, it has operating businesses, it has a price discovery history, and it will be able to show revenues and profits right from the word go. And lastly, there could be corporate action even after this follow-on public offer. So in that sense, it's a much differentiated issue from the R Power IPO. But still, could this be a sentiment breaker? That is completely a function of the market. I don't know how the markets will take to the budgets. If the budget is not received favorably, then subsequent to the issue, we could see a very different market sentiment overall and specific to this Adani Group company as well. So that is something which is yet to be tested. But to my mind, this IPO is structured in a way in which raising the capital seems to have been taken care of. The issue is reasonably poised to be successful, and the investors are serious long-term investors, so they are not going to come and sell on listing day. Today, even regulation doesn't allow that. And it would be very, very speculative to think that somebody would turn immediately bearish on a going concern like Adani Enterprises one day after the IPO. So I don't think that that possibility, which existed in 2008 in the case of Reliance Power, still exists today in the stock market. SEBI has done a lot of changes to make sure that institutional investors show much longer commitment, and they need to stay invested for much longer periods of time. Their shares would also be locked in. So that in essence is the difference between the Adani FPO and the Reliance Power IPO. I think the times are different, the issue is different, the nature of business is different, and the overall depth of the market and the market width is also something that has changed dramatically in the last 14 years. So I don't think that this issue is to be compared with that issue, but I would still hedge my bets on what damage the budget would do to this issue. And that is something that we need to see after the shares list, which is much after the budget. Thank you for watching this video.